What is good? What is good? All right, this is part two of the 5 strategies that I use on a daily basis. The last video we covered liquidity sweeps, and this video we're going through untested session highs and untested session lows. So let's get into it. All right, untested session highs and untested session lows. What are they? Why are they important? And how do we use them? So go onto your trading view, come over to indicators, just type in trading sessions. You'll get an indicator that looks similar to this. You can change the appearance so it looks however you prefer. Just a quick overview. The only sessions we have are Asia, London, and New York. Just like in the previous video, we went over the importance of liquidity. This concept of session highs and session lows ties into liquidity sweeps. Above a session high and below a session low lays lots of liquidity. So it gives us extra confluence when we're entering a trade based off the liquidity sweep. Just like over here, we have London high. During New York, it sweeps London high, closes back below, and then takes out lower draws on liquidity. We could do it the opposite way. We take out, for instance, here, we take out previous session New York. During Asia, it sweeps the low, it closes back above. And just like on the liquidity sweeps, we would wait for a close back above, stop loss just below, and then target areas of liquidity, which is the highs over here. Okay, so you understand how that works in a bullish case and a bearish case, where you're targeting, what your entry confirmation is. Let's look at a case where it gets invalidated, because there are times where session highs and session lows don't work, and understanding when not to enter is really important as well. So let's just find a random time. Okay, I guess you could use this as an example. So during Asia session here, we've swept previous New York session high. Prices closed back below, and you would say, okay, that's perfect. That's my entry confirmation. And then you would enter a short with your stop loss just above this previous high, and you would target draws on liquidity, which could be anywhere from, you know, this low or even as low as this low down here. But then what does it do throughout Asia session and London session? Well, it starts to accept back above that level, which was New York's high, and then it rips all the way higher. So to prevent getting into trades like this, I mean, on this example, it's a pretty tough because uh, you had pretty strong confirmation that you were in that trade. And often when you see the position starting to move in your favor, take risk off the table. You know, bring it to break even, because even if we do come back up, the worst is you break even, you move on to the next trade. They don't always play out in your favor. But I want to show you guys a better example of when you shouldn't be entering, because that was more of a case of the trade just goes against you. So Asia has swept previous session New York high. And what is it doing? You know, we're not closing it and accepting below. All it's doing is chopping around that level. So sometimes it pays just to have a few candle closures below the previous session's high or low, depending on what way you're targeting, just so you get that confirmation. Otherwise, let's say you jump in right off the bat on this one, off that candle closure, comes straight back up and stops you out immediately. So getting some confirmation is always better than predicting or guessing. Okay, so you get it. You understand what a session high and a session low is. You understand how to use it. You understand examples of when not to use it. Let's just go through the charts, backtest a few times, just so this gets through your head. Beautiful trade right here. So, Asia high. What happens? We sweep the high, we get a closure below. Few candles close, and they don't accept back above Asia's previous high. We're jumping into shorts, and we're targeting previous draws on liquidity, which would be this low just here. Nice 3R. Okay, let's find some more. All right, beautiful. What do we have here? Another sweep of Asia's high. So that's Asia's high. London comes through. We get some decent candle closures below that level. We're jumping into shorts. Stop loss just above the high, and we take out these draws on liquidity. Another 3R, pretty much a 4R. All right, let's find a bullish case scenario. Over here, what happens? Asia has swept London's low. What happens? We close back above and we take out draws on liquidity. So we get a closure, enter, stop loss below previous lows, take out draws on liquidity. You get the idea. Let's see if we can find another bullish case scenario. Beautiful, right here. What happens? London sweeps Asia's session low. We wait for a candle closure, back above the session low. Stop loss goes below this low. We take out draws on liquidity. That is a huge trade, nearly a 5R. So you get the point. Using untested session highs and untested session lows is extremely powerful. Couple it with the idea of what a liquidity sweep is, and you have something really useful to take into your day-to-day trading. In the next video, we're going to go over fair value gaps and inverse fair value gaps. So I'm going to leave a link to that video somewhere on this page. See you there.